White House officials meeting with crypto industry executives and bank associations yesterday to help break the stalemate holding up the Clarity Act in the Senate. Participants calling the talks constructive, but crypto representatives reportedly felt that banks were slow to engage. The major impasse is whether crypto exchanges should be allowed to offer customers rewards on stablecoins held on crypto platforms. Should the crypto companies be able to reward customers for moving their money out of banks and onto crypto platforms? The president voiced support for the bill, the Clarity Act, in the Oval Office yesterday. Watch this.
I'm a big crypto person. I'm the one that probably helped crypto more than anybody because I believe in it. And the reason I believe in it is because if we don't do it, Scott, I think we can say then China's going to do it. Right?
Yes, sir.
If we don't do crypto, then China's going to do it.
Joining me now is the Chief Legal Officer of Coinbase, Paul Grewal. Paul, great to have you. Thank you so much for being here.
Thank you for having me, Maria.
And, of course, Coinbase was a major participant in the meeting yesterday at the White House. What was the main takeaways from your standpoint?
Well, I think the main takeaway for the American people to understand is that the White House is fully engaged. Full credit to President Trump for prioritizing this conversation about the right way to regulate crypto and bring innovation to our financial system. I think it's also very important to understand why the American people should care about this at all. This is fundamentally about not only innovation, but competitiveness in our financial system and making sure that the U.S. dollar remains the global reserve currency and isn't replaced by a Chinese central bank digital currency. It would be a disaster for America if that were to happen.
No doubt about it. How will the dollar get undermined by this?
Well, what the dollar fundamentally needs ultimately is demand. As government debt rises, interest rates are critical. What stablecoins, a particularly important part of crypto, do is drive demand for U.S. dollars in ways that keep U.S. debt in check and keep borrowing costs low. And fundamentally, they also preserve the dollar's role as the currency of choice in global trade. So we think it's important that there be rules around that.
Let me get your take on this main issue that we've been talking about. That is the issue over rewards. And, of course, the banks are saying, look, we want limits on stablecoin rewards. They claim that it could lead to a massive flight of capital. All that money, billions, tens of billions, hundreds of billions of dollars, are going to come out of the banks and go into the crypto platforms. Because if you are a crypto platform and you lure a customer with actual money, rewards, of course, that's a great tool to get them to take their money out of their deposit account and put it in the bank. And put it in the crypto platform? Is that what you're asking?
Well, what I think bank lobbyists have done in confusing the American people and leaders on both sides of the political aisle on this issue, first and foremost, has been about is preserving their incumbency and limiting competition. The fact of the matter is there's no evidence whatsoever that stable coins or crypto more generally draw interest or demand for community bank deposits and other deposits away. In fact, they support the traditional financial system by, again, supporting the strength of the U.S. dollar. It's not surprising that the bank lobbyists want to preserve that incumbent position because, of course, the bank lobbyists represent interests that have over $3 trillion, Maria, parked at the Federal Reserve that isn't doing anything, that's simply just sitting there when it could be put to work for the American people. We think it's important that that capital be deployed much more than have false concerns about competition.
Well, what do you want to say to the critics who say, look, the crypto companies want it both ways. You want to be able to pay rewards and get a flight to capital into the crypto platforms, but you're not going to face the same regulations that the banks face. In other words, are you going to have deposit insurance?
Well, it's a very strange argument to make that somehow the crypto industry is seeking to avoid regulation and oversight when it's pushing for this legislation to be passed, and it's the bank lobbyists that seem to be digging in. No, we think sensible rules for crypto make good sense. We also think it's very important that consumers understand what they're getting when they make deposits to a stable coin or otherwise engage with the crypto economy. We're all about transparency and competition, and we want regulation and rules that encourage that.
But to be clear, the crypto platforms are not going to have anywhere near the regulatory framework that the banks follow.
Well, I would disagree with that only because under the Clarity Act, it's very clear the crypto industry is going to be under strict supervision and have strict oversight at the federal level. In fact, in many ways, for the very first time. The other thing I would say is that, when it comes to stablecoin deposits, it's important to understand that these deposits with stablecoin issuers are not then relent out to other parts of the economy. These are backed dollar for dollar in short-term instruments, principally U.S. Treasuries. They are much more secure than a fractionalized system that we have with the banks that introduce all sorts of systemic risks that don't apply here.
Paul, talk to us about what you're doing at Coinbase. Let's take a step back right now and see the incredible company that you and your colleagues are building here, because it really feels like you are having this ambition to make Coinbase the primary financial account of the future. You're talking about the everything exchange, expansion into prediction markets, stock trading, derivatives, 24/7 market access, traditional financial services offerings, account acquisitions, AI-assisted Coinbase Advisor, platform expansion for businesses and developers, and, of course, the on-chain consumer economy, and even an international expansion. Am I right?
It's a long list, to be sure, but we think this is very much in line with the president's vision of making the United States the crypto capital of the world. Look, Maria, we want to be the everything exchange, as you point out. We believe this system that has underserved the American people for too long needs an update. And we think the best way to do that is to bring products and services to our customers and to the wider world that fundamentally offer consumers choice. That's what this is all about.
Well, I think it was a surprise to some that you had the launch of stock trading and the Coinbase Advisor. That sort of takes you in a different place.
Well, we follow the interests and demands of our customers. And what our customers are saying is they want to have an integrated option for trading, for basic financial services, for prediction markets and other new alternatives that allows them to think of their financial future in an integrated way. We think Coinbase can offer that.
So if you've got these new and expanding offerings like direct deposit, how do you differentiate Coinbase from, for example, Bank of America, JP Morgan?
Well, I think when people think of Coinbase, they think of the most trusted place in crypto to engage with the crypto economy. We think that's a key differentiator. We also think when people think of Coinbase, they think of innovation and new products and services that allow them to engage with the financial system in new and fresh ways. We're happy to compete on those terms with the traditional banks, other financial institutions as well. We're also happy to partner with traditional financial institutions where it makes sense. And I think that part of the story is also important to understand.
So you want to partner, but you're also competitors.
Well, we're going to stand up for our customers first and foremost, and that's always going to be a red line for Coinbase. But where it makes sense to partner with banks, we're going to do so. We've done that with respect to ETFs. We've done that with respect to other partnerships we've announced. We think there's an important opportunity here both to compete and cooperate, all in service of our customers.
Can you compete on a level playing field if it's a different regulatory framework for the crypto versus the traditional bank?
Well, I think we all share a common interest in safety and security of the overall system. The specific rules that apply to one institution or one technology or another ought to reflect the strengths of that particular alternative, while overall keeping the focus on keeping people safe and making sure they understand where their money is.
So would you accept things like deposit insurance? Would you expect the same boundaries and guardrails that the banks face at Coinbase?
We think that the same commitment to a security standard and safety standard makes good sense. There are ways in which crypto operate that is different from the banks that make certain rules less relevant, just as there are ways in which the banks operate that make rules directly applicable to crypto less relevant to their business. It's all about safety, security, and soundness.
Of course. Now, there's another criticism, as you know, from the critics, and they say, look, if you're going to have all of this expansive financial services portfolios at Coinbase and at these crypto platforms, you're going to miss a whole big portion of the country. What about these rural areas that are depending on lending from the community banks? Are they going to be forgotten in a digital world?
Rather than being forgotten, I think they're actually being engaged for the very first time. Look, Maria, I think it's interesting. Stablecoins or crypto more generally actually offer community banks and the communities that they support and serve a new way to engage with their customers in ways that we think actually strengthen their position in their communities and offer greater alternatives to their customers. The fact of the matter is that community banks, like all banks, can and will have a greater opportunity to participate in this new crypto economy if this legislation passes. The reason? This legislation is currently drafted would offer banks for the first time in 27 years new powers, new authorities to compete with the Coinbases and others of the world on a level playing field. That, I think, is entirely in service of their mission. It does not undermine it.
Now, your CEO, Brian Armstrong, was with me recently, and he was not happy with what he saw in that bill, the Clarity Bill. It's hung up right now in the Senate. Are you comfortable with the changes made? Where are we on that legislation from your standpoint? Well,
we're comfortable that the White House is understands the issue, is fully engaged. We're also comfortable that not only Republicans but Democrats on the Hill understand the need for this legislation. You know, it's certainly the case, Maria, that K Street violence on occasion captures a lot of interest and attention when the lobbyists are fighting with one another. The fact of the matter is that the conversation continues to remain constructive among the principals, and we're confident we're going to see a bill get done.
Absolutely. And Brian Armstrong, when he joined me, walked us through some of the issues in a very practical way. Here's your CEO when he joined me just about a week and a half ago. Watch. I want to talk about the sticking point that you've been raising for a while now, and that is whether platforms are able or should have the ability to pay rewards on or interest on stable coins.
This stablecoin reward issue is very important, and I think President Trump has showed incredible leadership here, creating a strong crypto agenda. We just got the Genius Act passed into law, which actually did enable stablecoin rewards to happen. The banks had their own concerns, and we reached a good outcome in the Genius Act. And now the banks really are coming and trying to undermine the president's crypto agenda.
Are we going to be tapping into the Genius Act for ideas for this Clarity Act in terms of this legislation that would be suitable for you?
Well, it's very important to understand that the Genius Act is the current law. And so if for some reason we were to fall short of passing Clarity for some reason, Genius will continue. And the law under Genius is very clear. Rewards are available, and companies like Coinbase can offer them. So we actually think that what Clarity will do is extend the opportunity for crypto to a greater set. It's very important that we have new rules that go beyond just stable coins and that provide, for example, federal oversight for the first time of spot markets, that there be a clear token taxonomy so that we know what tokens fall to the jurisdiction of the SEC and what tokens fall to the jurisdiction of the CFTC and so forth. It's also very important that we protect DeFi, emerging an important innovation within crypto as part of this legislation. So there is an opportunity with this new legislation, but let's be clear, the law as it currently stands will continue whether this new legislation is passed or not.
Well, this is a very important point that you just make, and I want you to know that in about 20 minutes, I'm going to talk with the chairman of the CFTC. What do you want to make sure that the chairman of the CFTC hears from the crypto platforms?
Well, Chairman Selig has been a strong champion of innovation, not just in crypto, but across financial markets, going back now many years in his career. And he's made it very clear in his early public statements as chair that he sees new legislation in crypto as an important priority to fulfill the president's vision for this new emerging asset class. I think the most important thing that the new chair of the FTC can do is to continue to maintain a very positive, productive dialogue with the industry and, frankly, with those who have concerns about the industry to make sure that we provide not only strong oversight of this asset class, but also police fraud and abuse where it may take place.
Is the goal here to shift Coinbase's revenue profile toward recurring balance-driven economics while cutting the reliance on pure trading volumes? Is that one of the goals?
Well, the main goal is to provide clarity and certainty to this market and this asset class that has been deprived of it for a very long time. Look, it's no mystery that under the previous administration, we had chaos. We had regulation by enforcement. We had whipsaw rules that came out of left field and landed without any advance notice. And we had a hostility to crypto that fundamentally undermined America's competitiveness. What this legislation will do is preserve America's role as the crypto capital of the world, as President Trump has made clear he wants to see happen. Well, and if that happens, we think our business will benefit just as others will as well.
I mean, Paul, there's so much money moving into your space and elsewhere. I mean, you just look the valuations in AI alone. Elon Musk now merging his companies, his rocket company SpaceX, acquiring his AI company XAI. This is going to be an IPO down the road, and it's talking about it's the biggest M&A transaction of all time. The valuation $1.25 trillion. He put out a memo about it. What do you make of all these valuations?
Well, there's no question that we are looking at some extraordinary times in our markets and some extraordinary IPOs that may be coming later this year. What I think it all points to, Maria, is that the American economy, for all of its struggles and challenges, remains strong and dominant, and it's critical that we pass sensible rules for parts of it that will support new growth, new innovation, and we think that that's what the Clarity Act will achieve.
I thought it it was really interesting that the company did want to get into the prediction markets business. What's so hot about the prediction? I mean, you've got Polymarket, you've got Kalshi. What is the attraction with these prediction markets from your standpoint?
Well, prediction markets fundamentally give our customers is the opportunity to play on a level playing field with larger institutions that have been able to hedge risks and leverage unique insights into particular markets for many years, in fact, many decades. Prediction markets in that sense aren't new. What is new is that the common person on the street, retail customers, regular people, can now leverage their insights, can now put their intelligence about events and other happenings to work and benefit from that financially. We think that's very exciting.
Coinbase, of course, set to report fourth quarter earnings on February 12th. After the bell, we're going to be watching those numbers. Give us your overall vision going forward of how our economy is changing and how transactions will change with stablecoins, with all of these digital assets. How do you see things changing in terms of practical day-to-day life for our money?
Well, more and more of our life, Maria, is moving online every day. I think all of us see that. Frankly, we feel it in the way that we're interacting with one another, with companies, with institutions, with our government. And so we think it's critical that there be a financial system that is ready for that purpose, that allows for smoother, less friction interactions with one another when it comes to moving money around the internet. We think crypto can play an important part in that.
Well, the president is right. If the U.S. doesn't do it, China is going to do it. What's your take on communist China right now and its efforts to dominate this space?
Well, the Chinese have made it very clear. They have every intent on seeing their currency, the yuan, displace the dollar as the global reserve currency of choice. And they're doing that in very innovative ways. They are offering a central bank digital currency in contrast to the private currencies offered here in the United States and elsewhere. They're providing for yield or interest on that central bank digital currency. And they're making it very clear that if the U.S. cedes its position of leadership, it's more than ready to step in. We think that would be a great mistake and a great loss for the American economy. It would be a great mistake or loss for the American people. And that's why we think President Trump's vision is so important.
All right, let me end where we began, and that is, of course, this legislation. What is your best expectation in terms of the Clarity Act getting back on track and, in fact, communicating real rules in terms of rules of the road for digital assets?
We're very hopeful. I think yesterday's summit at the White House was an important step. And again, credit to the White House for convening the parties. There is work that remains to be done. But we saw, for example, last week, the Senate Ag Committee move forward with its version of the bill. Credit to Chairman Bozeman for that hard work and excellent effort. So we think that once we get past some of these distractions, we're going to see a focus again on what matters, which is giving the American people sensible rules for crypto and giving them a choice in their financial system. This legislation is going to do that. We think it's going to pass.
Some people are questioning why the Ag Committee is one of the leadership roles here.
Well, it's important that the Ag Committee provide leadership because the CFTC will be an important regulator under this legislation, and the Commodity Futures Trading Commission falls to the jurisdiction of the Ag Committee. That's why they're so important to this debate. All
right, Paul, we will be watching your work, and of course, this is an exciting time. Congrats to you.
Thank you very much, Maria.
Thank you so much for being here, Paul Grewal. Stay with us. We'll be right back.